Hi guys, so in my last UK stocks video, someone suggested doing some UK tech stocks. So that's what we're going to look at today. We're going to look at some UK tech stocks that are likely to outperform the S&P 500 according to our Smart Score. So we're going to look at 4 stocks. 3 of them have a Smart Score rating of 10, which means that they are extremely likely to outperform the S&P 500. And one of them has a Smart Score of 8, which is still really positive and still means it's likely to outperform the S&P 500. Now, a lot of these stocks are lesser known stocks in the UK. And if you want to go for safer, bigger stocks, then maybe check out something like Computer Center, because they are like a massive company that's used by loads of companies, but they are, huge. They've been around for a long time, and whilst they maybe won't outperform or have huge gains, they are a fairly stable company generally. As always, please make sure to do your own research. This is just showing you what our analysts are thinking and giving you the lowdown. So just make sure to do your own research before you make any investments. So the first stock we're going to look at is Smart Metering Systems, ticker symbol SMS. And we can see here that Smart Metering Systems is a UK-based company which connects, owns and maintains metering systems and a database of energy companies. It provides project management, installation of the gas and/or electricity supply and connection, procurement, installation and management of the meter asset, data collection and ongoing energy management services. It works on the installation of domestic and I&C gas meters and electricity meters, management of gas meters, electric meters and ADM units, and provision of energy advice. Now, in the UK, smart technology and smart meters are becoming incredibly popular, and I think that more and more people are realizing that smart meters can save them energy and save them money. So personally, I think something like this could be a really, really good investment, but that's just my own personal opinion. But let's have a look at what our analysts are saying. So SMS seems to be a strong buy according to our analysts. So only 4 ratings here, but all of them have issued a buy rating, and one of them was only 10 days ago. Now, the average price target here may seem like an average downside of 2%, but part of this is because when these price targets were issued, they were targeting a buy above where it's currently got to. So you can see here, for example, they were forecasting 1,000 pence here, and that was last month, and clearly it's already reached that. So that's why it could show a downside here. So in my view, that's only positive and potentially could mean even bigger gains. In terms of the stock analysis, as I said, you can see here Smart Score of 10, so outperform. The analysts, as I said, was strong buy. The blogger opinions are bullish, and the technicals are quite positive here as well. It's only the asset growth that seems to be negative. Now, if we look at the stock chart, they are currently at their all-time high, and they have seen pretty steady growth since 2019. So if we have a look at their website and what they are doing, you can see here that they have the tagline of delivering the future of smart energy. All of the services we offer are geared towards supporting the decarbonisation of the UK's energy network and the establishment of a smarter, greener and more sustainable grid that works better for suppliers and consumers. So this could potentially be a really decent investment, especially since, like I said, smart meters are a big thing and they're just growing in popularity. And because they are trying to focus on green energy and sustainability, we all know that that's a big thing right now. Now, the next stock we're going to look at is Dot Digital. Now, the next stock we're going to look at is Dot Digital, ticker symbol DOTD. Dot Digital Group is a software as a service technology company. It provides software as a service and managed services to digital marketing professionals. The firm's core product is DotMailer, which is an email marketing automation platform. Now, marketing is a huge world, and especially with the rise of affiliate marketing and online influencers, I think systems like this are performing incredibly well at the moment. Again, if we have a look at their website, they are a leading provider of email marketing and omni-channel SaaS technology to empower digital marketing professionals. They are used by over 70,000 marketers in 156 countries worldwide. They were founded in 1999 as a web design agency, and they've developed a globally compelling product suite. Now, they have a ton of information here on their investors site. So if you are interested in investing in them, I would recommend checking this out and looking through all of the information that they have here, because it's very, very comprehensive. But let's have a look at what our own analysts are saying. So 3 out of 3 analysts here have a buy rating, which means it does come up as a strong buy, with a fairly small upside here of 0.43. But again, same as before, these buy targets were issued 2 months ago, so it's already smashed through those price targets. The latest one seems to be a 290 pence price target, which is a 7.4% upside, and that was issued last month. Pretty similar here as the last stock, 10 smart score, strong buy, bullish sentiment, and everything pretty much positive. The only difference here is that asset growth here is positive also. As we can see here, they have also steadily been growing since pretty much 2020. And they are just shy of their all-time high at the moment. Now, this is interesting on the news here. Shareholders of Digital Group must be delighted with their 456% total return. The Digital Group share price has soared 435% over 5 years, and it went up 38% over the last quarter. While the markets are a powerful pricing mechanism, share prices do reflect investor sentiment, not just underlying business performance. And as we can see here with Digital Group, they achieved compound earnings per share growth of 15% per year, which is slower than the share price growth of 40% per year, which suggests that market participants hold the company in higher regard. This favourable sentiment is reflected in its fairly optimistic P/E ratio of 64. So this could be a hidden gem potentially. So the next stock we're going to look at is debatable on whether or not it counts as a tech stock on the pure basis of tech stock, but it does seem to come up under the tech stock listings, and they do work a lot with information technology and security in tech. So we are going to include it here, and that is BAE Systems. Ticker symbol is BA. Now, you've probably heard of BAE Systems, but if you haven't, they are a British multinational arms, security and aerospace company. The company is the largest defense contractor in Europe and among the world's largest defense companies. It was ranked as the 3rd largest based on 2017 revenues. Its largest operations are in the United Kingdom and the US, where its BAE Systems Inc. subsidiary is one of the 6 largest suppliers to the US Department of Defense. It was founded 21 years ago in 1999, and they are a component of the FTSE 100. Now, if we have a look at the price targets, we can see here that it's showing as a moderate buy, but it is quite interesting because if we look at these ratings from the last month and 2 months ago, the hold rating here still shows a potential upside of 3%. So overall, 13.3% potential upside, because even the low price target is actually higher than the current price target, which is where the high potential upside comes from. In terms of stock analysis here, again, 10 out of 10 smart score. Very positive sentiment, both with bloggers and TipRanks investors. Everything here is looking positive, with the exception of the insider selling activity. So we've got, in the last few months, some small transactions here. Although the one that's showing as the bigger sell, we can see here there was also a buy by the same person around the same time. So not quite sure what's going on there, but in the grand scheme of things, it's not a massive amount. 14 days ago, they also announced that they will be increasing their dividend which brings their dividend yield about the same as the industry average at 4.3%. Their dividends are quite easily covered by the earnings, so a large portion of their earnings are retained to grow the business, which is a really good sign. It's kind of what I want to see when I invest in companies, is that they are retaining their money to grow the business and get those bigger gains. So the last stock I want to look at, I wasn't going to include it because it is a very small niche company, but I thought I'd throw it in here, and it's Netcore PLC, ticker symbol NET. So Netcore is a UK-based software company. They develop and market communications, workforce management, and business process management software and services. It serves utilities, transport, travel and leisure, education, police, housing, and other industries. And you can see here on their website as well that they do serve a huge amount of people, including the NHS, which is our National Healthcare Service. So they are serving some pretty huge clients, but they're not a very well-known company. So the smart score here is 8, and the analyst ratings show a moderate buy, but that's because there's only one analyst rating here of a buy issued 2 months ago. And that was a price target of 100, which it still hasn't reached. So could potentially reach that and maybe go beyond. So if we have a look at the stock chart, we can see that they are currently at their all-time high, and again have been rising steadily pretty much since March 2020. Now, there are a lot of interesting news articles here. They are all quite old, but they do seem to contradict each other. So we've got one that says that Netcore is interesting, and then another questioning the returns on capital and the balance sheet. So without making the video too long, it might be worth going on the TipRanks website, link is down below, and checking out these articles if you are interested in the company. Hopefully that's been some interesting ideas for new companies to research that are listed on the UK stock market, and hopefully you've enjoyed the video, and I will see you next time. Bye.